Hello guys, today we're gonna cover the principle or the topic first. Our topic will be fixed and or tangible asset. The principle which we are covering today, we're gonna teach you how to calculate depreciation from the date of purchase to date of sales, where you have, because since when you purchase an asset, it will depreciate from that day you have purchased it until it is sold. So depreciation from the date of purchase until the date of sales. Today we're gonna cover activity 3 of the fixed and tangible asset. So I advise you to pause the question and attempt this question. Just pause the video and attempt this question. You'll be required to prepare the following ledger account: vehicle, accumulated depreciation on vehicle, and also asset disposal. Please subscribe. Don't forget to subscribe. I hope you have attempted this question, so we can start. They said the business financial year ends on 28 February 2019. The trial balance on 1 March 2018. Okay, they've given us the vehicle beginning of the year. Okay, after they've given us the accumulated depreciation on vehicle at the beginning of the year. We are given 3 adjustments. Adjustment number 1, they said the business bought a new vehicle on 31 August 2018 for 32,000 and paid by check. They said 2, on 1 December 2018 they sold one of their old vehicles for 40,000. Its original cost price was 51,000 and it was bought on 30 July 2016. Okay, depreciation is calculated at 15% on straight line method. Please, we said today we are covering the principle depreciation from the date of purchase to date of sales. The minute they have given you this statement, it was bought on 30 July 2016, the sold asset. They're referring to the sold asset. It means you have to calculate depreciation from that date it was purchased until when? Until during the current financial year. So that's what we are calling depreciation from the date of purchase until the date of sales. So we're gonna prepare, don't forget, ledger account, vehicle, accumulated depreciation ledger account, and also asset disposal. So now we have to do what? Please make sure you're gonna draw your timeline very well. Timeline is one of the important tools you have to use on our topic. Okay, the minute you read a date, please allocate it inside your timeline. So let's start. They said the business financial year ends on 28 February 2019. It means your financial year end will be 28 Feb 2019, as like this. Okay, so it means if the end of the year was 28 February 2019, it means the beginning of the financial year was let's put it here, it will be 1 March 2018. When if the year ended on 28 February 2019, it means it has commenced on 1 March 2018, beginning of the year. That's what is important. Okay, they said trial balance on 1 March 2018. It means trial balance at the beginning of the year. So it means these balances, even if they cannot state, it means these balances will be balances at the beginning of the year. So we have balance of the vehicle at the beginning of the year as 100,000. So we are going to vehicle ledger account. On the debit side, vehicles and assets, we're going to say balance brought down of 100,000. Okay, from there accumulated depreciation, you also have balance brought down of how much? That amount is 30 30,000. You have accumulated depreciation of 30,000. It means at the beginning of the year. So let's start. So let's continue starting. They said, number one, the business bought a new vehicle on 31 August 2018 for 32,000. Please, first thing, for paid by check. Oh, sorry, by cash. So they said, first thing you have to record what? Your date. 31 August 2018. So you're gonna say, this one is our current. So our financial year commences on 1 March 2018 and ends on 28 February 2019. It means during our current financial year on 31 August, can you say 2018, they purchased a new asset. You can say new. Okay, let's record the other important part. They said for 32,000 paid by check. You're going to your vehicle ledger account. On the debit side, you're gonna say bank and say 32,000. Okay, so as we continue, on 1 December 2018 is a date. It's very important. They sold one of their old vehicles for 40,000. Its original cost was 51,000 and it was bought on 30 July 2016. That means now you're gonna record. Let's record the date. Allocate the date. We have 1 December. This 2018. Okay, they said they sold one of their old vehicles. After, now we're gonna record inside our ledger account. You're gonna, on your credit side, you're gonna have asset this sal. You're gonna record the cost of the sold asset. Its original cost was 51,000. You're gonna say 51,000. Okay, after they said it was sold for 40,000. It means inside the asset disposal note, you're gonna say they said they sold it for 40,000, referring to cash because they've not stated on credit. It means you're gonna say 40,000. Just like this, bank 40,000. So they said it was bought on 1 July 2016. So please, this is a date. It's very important. It means you are going to your timeline. On our timeline, they said this was bought on 30 July 2016. This is very important. It means this asset they purchased it on 1 July during the purchase date. This asset they purchased on on 30 July 2016. It means it has depreciated from this day until the beginning of the year, and also the current year will also depreciate until they sold it on 1 December 2018. It means we have to calculate depreciation from 30 July 2016 until 1 December 2018. It means now you must first write your timeline very proper. Let's start with 30 July 2016. That year when it was purchased on 30 July 2016. That year ended on 28 February 2017. After purchasing that asset, the financial year ended on 28 February 2017. This is our end of the year one when they purchased that asset. Okay, and we had another year which commenced on 1 March 2017. It's the beginning of the following year 2, after purchasing that asset, and that year ended on 28 February 2018. After we have our current financial year. This one we are calling it history. What happened? We are gonna calculate depreciation historically. Okay, so now we have year 1. Can I say this one is year 1? Year 1 and year 2. This one is our year 1, and also we have year 2. And we have our current year. I will reflect that. So let's start by calculating the total number of months which this sold asset has spent inside the business. It was purchased on 30 July 2016. It means during the current financial year, during year 1, it has spent certain month, and also during the following year another month, and during the current year it was in the business from 1 March 2018 until 31 December until 1 December 2018. So it means now you have to calculate how many months is this asset. You have to calculate how many months is this asset spent inside the business. So from 30 June until 28 February, now you cannot count June because it's at the end of the year. It means at the end of the month. It means you're gonna say July, not July, August, September, October, November, December, January, February is 7 months. It means it has been inside the business for 7 months. The following year is March until February is just 12 months because the full year during the current year, during the current financial period, it was inside the business from 1 March 2018 until 1 December 2018. It means it was inside the business from March, April, May, June, July, August, September, October, November is 9 months. You cannot count December because they sold this asset at the beginning of the month. So you cannot calculate that month. Okay, now we know how many months did this sold asset spend inside the business. After we're gonna calculate how many months did the new one spend. The new one was purchased on 1 August 2018. It means it was from 1 August 2018 until the end of the financial year. So you're gonna calculate. You're gonna say August. You cannot count August because it's at the end of the month. You can say September, October, November, December, January, February is 6 months. So don't forget, we had assets which had been inside the business from the beginning of the year until the end of the year. So they will be inside the business for 12 months. So please, if you can master the timeline very well, you'll never get wrong when calculating depreciation. I hope you understood what you understood the timeline very well. So now we can calculate depreciations. Let's just start with the new. So they said depreciation is calculated at 15% on straight line method. So it means our depreciation is gonna be cost multiplied by depreciation rate multiplied by x over 12. Okay, so now when we are calculating depreciation for the new asset, you're gonna say the cost of the new asset. How much is the cost of the new asset? It was bought on the 1 August for 32,000 is our cost. So you're gonna say 32,000 multiplied by depreciation rate of 15%. They said it's 15% multiplied by x. How many months did this new asset spend? It was inside the business from 31 August until 28 February for 6 months. I'm gonna say depreciation for the sold asset was just this amount, 2,400. So now we're gonna go for depreciation for the sold. The sold asset, we're starting by calculating depreciation from the date of purchase to date of sale. So during year 1, I'm referring to this period from 30 July 2016 until 28 February 2017 history. Depreciation was calculated as follows. The cost of the sold asset was how much? 51,000 is 51,000. The cost of the vehicle was 51,000. It means our cost during year 1, they said 51,000 multiplied by depreciation rate of 15% multiplied by it spent 7 months inside the business. We're gonna say 7 divided by 12. Depreciation for the first year 1 when this asset was purchased, it is 4,463. Now we have to calculate depreciation for year 2. It means that asset is spent. It was inside the business from 1 March 2017 until 28 February 2018. So you are still using the straight line method. You are still having the cost of 51,000. Depreciation rate is still 15%. After this asset is spent 12 months inside the business during the following year, depreciation for this asset is 7,650 during year 2. It means, can I state this? On 1 March 2018, our accumulated depreciation of this sold asset was 4,463 plus 7,650 because it's depreciation from year 1 and also year 2. So it means at the beginning of the current financial year, which commences on 1 March 2018, it means we are having accumulated depreciation of the sold asset at the beginning of the year as 12,118. It means this. So it means you can record this amount as inside your accumulated depreciation as asset disposal. you already have 12,113. It's depreciation of the sold asset at the beginning of the year. So I said plus, we're gonna add depreciation for the current year of the sold asset. So can I say current year depreciation for the sold asset during the current year? We're gonna say we are still having the cost of 51,000. Depreciation rate is 15%. This asset has been inside the business from 1 March until 1 December when they sold it, and it has been inside the business for 9 months. It means you're gonna say multiply by 9 divided by 12. So our depreciation for the current year of the sold asset is this 5,738. Okay, now we can calculate depreciation for the old assets which had been inside the business from the beginning of the year until the end of the year. Now we are using straight line method. It means you just have to calculate the cost of the assets which had been inside the business from the beginning of the year until the end of the year. Only the cost. Now we are calculating the cost. We have been given the cost of the asset at the beginning of the year. It means of 100,000. It means it's 100,000. So please check on my other video called Activity 1 Part A on my YouTube channel. You'll be able to calculate a depreciation of the old assets. So you'll be able to calculate the cost of the old assets which had been inside the business from the beginning of the year until the end of the year. So now inside this cost of 100,000 is the cost of the vehicles at the beginning of the year. Remember, they sold an asset, and that asset it was inside the business during the financial year. It means that the cost of the sold asset is being included inside this cost. So you have to first subtract what the cost of the sold asset. The sold asset its cost was 51,000. It means now our current cost of the asset which had been inside the business from the beginning of the year until the end of the year was this amount. Was 49,000. So now we're going to calculate depreciation on 49,000 is our cost multiplied by 15% multiplied by 12. This asset has been inside the business for the whole year. Our current depreciation will be So depreciation will be 7,350 for the old assets. As we got. So now after doing these calculations, you're gonna record after calculating depreciation, you're just gonna record that inside your accumulated depreciation ledger account as depreciation for the year. This amount will be you'll take this amount to your income statement. The total amount which you will have here will be inside your income statement if you are required to calculate income statement. So depreciation for the new asset was 2,400 plus depreciation during the current year for the sold asset. During the current year for the sold asset was 5,738. We only want depreciation for the current year, and also the old asset was 7,350. So you have to sum this, add this together, and also. And next to asset disposal, you are required to add depreciation for the year, for the current year of the sold asset. It's the same as this amount, the same amount as 5,738. You have to just record. It means you are gonna add it after subtract it because you are selling the asset. So you have to record it. So we got our total depreciation for the year as 15,488, and also accumulated depreciation is 17,851. So we now we can apply double entry principles inside the asset disposal. We have a sold asset. This amount from vehicle, we sold an asset for 51,000. It means you're gonna say vehicle as 51,000. Okay, accumulated depreciation. You'll have your accumulated depreciation as 17,000. You're just transferring it. Asset disposal, you transfer the vehicle ledger account. So from there we have to calculate what or close off these ledger accounts. we're gonna start by closing the vehicle ledger account of first closing. We are closing the vehicle ledger account. So after closing our vehicle ledger account is as follows. We just added these two. After we got our amount transferred it here and subtracted 51,000, we got 81,000, and also is our balance brought down. We're gonna close off our accumulated depreciation ledger account. So we're gonna add our credit side and get the amount, total amount. So after adding this credit side, we have 45,488. So you're gonna transfer this amount, the same amount here. You will have your balance carried down. So we subtracted this amount, asset disposal amount, and also the total. We got our balance carried down of 27,637, and also it will be our balance brought down as 27,635. So after we are going to our asset disposal ledger account. So inside our asset disposal ledger account, please, you must add the credit side and compare. Our aim here is to calculate our profit on sales of an asset, or it can become a loss on sales of an asset. So after calculating our my credit side, adding my credit side, I got 57,851. It means it's greater than the debit side, so it means we're gonna have a profit. It means we're gonna say profit on sales of asset. You're gonna just subtract 57,851, subtract 51,000. You will have your profit on sales of an asset as 6,851. It's the end of our question. So please try to attempt this question before getting the solutions, just like before I teach you this. Please subscribe, please just subscribe, share this video on your social media. It might be WhatsApp, your Facebook, so that other learners who are doing accounting can pass this. And if you are not doing accounting, please just subscribe. You'll mean a lot to us, because of now you'll be building accounting, you'll at least be contributing something to the nation. Let's try to change South Africa. Let's try to change South Africa. I teach because I want to change the world. Build accountants, be an accountant which has all the basics. Please watch all the videos on the topic fixed and tangible asset. Watch all the videos on the topic fixed and tangible asset. You will be able to calculate. My aim is to help you to understand how to calculate depreciation on all attempts, on every question paper which you can get from during your examinations. From grade 11 or grade 12, you'll be able to calculate. Let's try to build you an accountant. Good luck with your test. Good luck with your life. Build your own future. From me, your host, Richmond. Thank you. I love you very much. Please don't forget to subscribe.